One price is a single price that calculates using the overnight trading data and populates on your chart at 8 a.m. Eastern Time each trading day. You can see over here we have built-in analytics. This is an entire year's worth of levels, 259 trading days. And you can see that each of these levels, there's a 98% fill rate. In day one, it's a 76% fill rate. In day two, it's 85%. In day three, it's 88%. In day four, it's 90%. Within 10 days, 93% of the levels are filled. And within 20 days, 95% of the levels are filled. And the overall fill rate, we get another 3% after 20 days. 98% of these levels get filled. You can see right here, 198 on day one, 22, 9, 4, 7, 5, and 8 after 21 days. We'll come back to the analytics in a minute. I want to show you a couple of things. One of the things about one price is that it is a complement to any strategy, really. And it, with such a high probability of being filled, really the very first day, and we're looking just right now at the S&P 500. I'll jump over and I'll show you a NASDAQ chart in just a minute here. But especially in these markets, I hear from a lot of traders that what they've been doing or their systems or their strategies, it's just not working with this increased volatility. And so I wanted to show you, this is Friday's market, and here's the 5 a.m. candle. I'm on Pacific time. So this is 5 o'clock. It's 8 o'clock on the East Coast. And this candle opened right here. That's actually, if you look right here, this candle opened at 29.49.75. And one price is right here at 29.23.25. So basically we have the open of this candle up here around 49 and one price down here at 23. So there's a 26-point movement down to here that has a very high probability of happening in that very first day. And then you can see they actually came back up to it and retested it after we broke below it, and then sold off about 80 points down here to an old one price level from early back in December. We had this one price level down here. So there's Friday, but let me just show you that it actually, how it works on other days. So on Thursday, the price populates right here at 3,093.50, and we trade all the way down to 3,006, and then we traded all the way back up to 3,093.75. Well, we actually went just a little bit higher than that, a couple points higher. So this was a 90-point move from the low to come back up and fill our one price. So this price is going to act like a magnet. Now, it doesn't always mean it's going to get filled. Obviously, we know it's a 76% probability that it'll get filled in the first day. So even on a day like Thursday, when there was a very hard sell-off, there's this magnet that the price wants to come back to. So not a big surprise that they came back to this price, and then they brought it all the way back down here, which was another one price level that they filled. So let's go back and look at Wednesday. By the way, 90 points, and even if it came up to here and let's just say it stopped, this was a 70-point run. Do you think you can figure out a way to get some profit in that 70 points? So here's the open of this candle on Wednesday. It is 31.35.75, and our one price is 31.46.50. And you can see that we actually ended up trading right up here within just a few candles, about 30 minutes. We traded right up here to this price. So from the low down here, 31.75, this was a 15-point move up to this price to fill. They tested it, they broke it, they came back and tested it. From this test right here, they went from 47 all the way up to 81, so there was a 40-plus point move off of it. They came down and broke it, they tested it, never closed up above here, and then from 46.50 they ended up selling off all the way down here. This is over a 50-point sell-off down to there. Now let's go back and look at the way Tuesday worked. So here's the open on Tuesday. They opened on this candle here. The open of this candle was 32.43.50, and if you were trading Tuesday, you know what that market looked like. And they made an attempt up here, but they could not get up there to that. And eventually, this was just I was obviously trading this day, and I remember how this market looked. I don't think anybody was trying to buy this. So there are times where certainly you get far enough away, and if you pair this with some of the other things like our key turn prices, which are just absolutely amazing, and I'll show you that in another video here. But so every day, this is not, obviously this is not going to work. If we go back and we look at the analytics, it's not a 76% on the first day, but within 20 days, 95%. So 76% probability of something of a particular price happening in the first day, that's pretty great. And 95% in 20 days, there's a lot you can do with that if you're not just a day trader and you have other tools in your tool belt. So let's talk about the 24th now. Here's the open, and that open here is 32.54.50. So 32.54. And we traded all the way down the low right here, 13, 14 area, and then they rallied off of that low back up to 32.53. So, you know, pretty big range here. And of course, they've not come back. We've not been back up to 32.82 to fill that yet. So that's not happened. But you can see that we've filled some of these really critical prices. You can see from Friday's market, we opened up on Friday's market at 62, and we traded all the way down here to 50.75. So there was a 12-point trade down to there. They came back up and tested it, and then they sold off another 20 plus points down to there. You see Friday or Thursdays of last week, and you see we got pretty close here. They came from all the way here, the open at 33.81 area, and traded all the way back up to 89. Couldn't quite get here. They were close, about 6 ticks or so away, and then they sold off hard. And then we could do this all day. So the point being is this, is that if you have something, this isn't an everyday kind of thing, but it is really useful about 3 times a week. It's very, very useful to have in your tool bag for trading and trading these markets. So you can go check out, there's a link here below the video. You can go check this out. Also want to point out that the very bottom, one of the things that was just really just, you know, jumps out at you is we had this price from way back here in December, and we came down. It was this, close this so you can see that, 28.55. This was a one price from December. Came down, probed that by just a couple points, and then they rallied hard off of that, and they rallied from 28.55. So they come down here. If you were looking to buy in this area, they came down here, they touched 28.55, and then from 28.55 they just absolutely took off all the way up to 29.95. So this trade from here to there, that's about 140 points off of our one price. So they came right down, they filled the one price, and then they rallied 140 points off of one price. So, you know, pretty amazing how this thing works, and it picks out these prices in the market, and then eventually the market is going to come back to it. So highest probability is within 20 days it'll do that, but eventually the market wants to come back to these prices. It's a magnet. So imagine how you could use this with some of what you're already doing, and how you could have this extra edge or advantage of knowing what price, as in to the tick, has the highest probability of being filled and within what time frame. So you can check out, there's a link below where you can go check out a little bit more about how to use one price, and also up in the top here, you can go check out. I'm actually going to hop over here and I'll show you key turns and how this thing all works, and you can see some of these. You can see the sell off here that happened, and so we'll jump into that in just a little bit. You can go check out that video, and I will see you in the next video.